Good afternoon. It is Tuesday, December the 16th. I wanted to focus on bull put spreads today. As its name implies, it's a bullish trade, and it is a spread, which means we are going to be selling some type of security and buying a very similar security, one long, one short. A lot of different variations of spread trading. I love most of them. We'll talk about bull put spreads today. Now, since it is a directional trade, it begins with a forecast. So I've selected Google here, and you can see that recently Google has been in a bit of an upward trend. Let me zero in here a little bit. We kind of had a level of resistance in this area right here. We broke through on good volume. We've come back down to about where level of support should be. We're back to 30-day, 30-period moving average. We're back to this area which previously was resistance. Oftentimes, old resistance will become new support. We don't quite have our MACD or our stochastic turning up yet, so we are anticipating here a little bit. We are a little bit early on this schedule. But I think there's a lot greater likelihood that this stock moves up from where we are today than moving back down. So I'm back to our payoff profile, and let me jump back to where you would add or take away simulated trades. You can see that I'm right at the money here, pretty close to right at the money. We're selling the 305s. We're protecting ourselves, buying the 302s. So there's the 305s, our short leg, 302.5s, our long leg. And we pretty well need Google to go up from here, or at the very least, not come down. We have a 2.5 point difference between our two strike prices. That would be our maximum loss less the potential gain that we bring in. So it's just a little less than $1 right now. So we could lose $1.51. We could make 99 cents. At least that's how it is at this moment in time. Now today is the 16th, so I've chosen a very short time frame. We could lengthen that, of course. Next week, Christmas, a lot of people will be traveling. You'll have some shortened trading days and, of course, Christmas Day off. January, yep, we've got gearing up for New Year's Eve, New Year's Day, and so a little bit of time off there as well. But let's take a quick look at these. If we go to the 26th, we get a little bit bigger credit. More time for the security to move in our favor or against us, either way. Now we're out a little more than 2 weeks, about 2.5 weeks. Not that much difference at all. Let's go back to our starting point here. About 3 days from now on the 19th. We could also go further out of the money. But before I do that, let's go back and look at our payoff profile here. If the security goes down below our strikes here, we would have our maximum loss. Okay. We're at about 305 here, and once we break below 305, we begin losing to where we would get down to about 302.5. Then it could go down as low as it would, and we wouldn't have any more of a loss. Our loss is capped. We have a maximum loss. Now, for this trade to work out, we really need to be right with our forecast. If we were less confident with our forecast, we could go further out of the money. So let's say that we go all the way down to 297 for our long leg or cover leg. Let's say that we go down to 300 for our short leg. Now, the amount we could make is a lot less. Therefore, the amount we could lose is bigger. We could only make 52 cents. We could lose $1.48. I said that wrong. $198 is what I was trying to say. But we have a lot higher probability of having a winning trade because now our break-even point is much, much lower. It would be our short strike less the credit. So about $299.48, not counting commissions. All right, so those are your basics of a bull put. Remember, it starts with your forecast. Then you make a judgment on how aggressive you want to be. And if you are right at the money and giving yourself more than a week, oftentimes you can get close to a 1-to-1 risk to reward ratio. This time you couldn't. Part of that is the time. But oftentimes you can. All right. Check out the link below to get to my website. Have a great Happy New Year and a very Merry Christmas.